Well, let's talk about the customer. Mike, I mean, clearly PayPal's success was identifying a customer need that wasn't being met. And presumably your continued success will be to continue to get that right. Is that a fair? But tell us, I mean, what PayPal came up with that was different from just using a normal credit card over the internet?
The key differentiator for PayPal has been that if you wanted to use your card online in the early days, first off, you couldn't. And then secondly, if you wanted to make a payment to somebody you didn't know, you were not very comfortable giving away your credit card details. And if they were a small trader, they probably couldn't take a credit card. So it was enabling trade in the online environment in the very early days, and then continuing to make it very easy, a very simple user experience, a username password, which is based on the email address and your password. And then with all of the risk and trust and safety issues that go along with that. So it's ease of use, it's speed, and it's security and trust and safety. So adding all of those pieces together made a very strong value proposition. And we continue to really look for that user experience as being probably the most important part of our business. So anything which compromises the user experience and makes the payment harder to complete is a no-no. We've got to keep things simple. We've got to really drive value for the customer and improve their lives and the way they can use their money. I think at the same time, listening to your customer is one thing, but if you listen to your customer, I'm thinking of Henry Ford, he was listening to his customers, and his customers were saying, I want faster horses. They weren't asking for cars. You need to interpret what your customer is asking for. It's like Apple. Apple have just made another PC. No, not really. They've completely revolutionized the user experience. It's the user experience that really matters. And that's really what PayPal's trying to do with payments. And I think we will continue to be
okay, because you mentioned that the first idea was mobile, but then you thought the customers were not quite ready for mobile. Are they ready now?
I think that's where I was talking about earlier. The concept of the digital payment is very much the way that things are evolving. The mobile user experience will be part of that, but it won't be just tied to the mobile phone. I think there will also be people using iPads. There will be people doing commerce in their cars with their onboard computers. There'll be a lot of different experiences. Gaming machines like Xboxes on their PC, regular shopping. People don't just use one channel. And I know people who still select the goods they want to buy using catalogs, then go on the web, buy them, and then return them in the store. It's like it's not one. Yeah. It's not one channel.
This was Lawrence's point, but from a banking point of view, it makes things very complicated and expensive, doesn't it? If people keep swapping channels and they don't expect to pay any extra for moving.
Yes, but it's happening. So the reality is, we are in a world where almost anything can be digitized. The value of it can be held in digital form, and a payment is nothing other than a digital packet to which we ascribe value or use it as a mechanism to transfer value. I think the point that was being made earlier is it doesn't stop there, however. It goes all the way back into the payees ecosystem and all the way into the payors ecosystem, and hence the integration and the end-to-end costs and making sure that data integrity is there and that the trust transfers all the way down the value chain is as much the challenge as anything. But I think perhaps, or arguably, the next step change is if you buy the notion that a payment is a set of digital values, how is that different from any other asset that can be held in digital form, quantified in digital form? And if you can put the appropriate trust framework around that, if you can create the right user experience, then in principle, you've actually created, this is the whole big data point, you've created the potential for a wide range of different digital services beyond the traditional payments or even digital payments space. So I think the innovation opportunity is there. We have the burden of regulation, if you will, going at the same time. But this is the opportunity for the financial industries to move into that space. And there will be clearly early adopters. There will be some people in the middle, and there will be some laggards. But the world now offers those a completely different range of service opportunities that didn't exist previously. The large corporate space is very, very interesting because you are correct. They tend to be slower adopters of new technology. They are a little bit more risk averse. They like to kick the tires. They like to do their due diligence and inspect. They're fairly risk averse in this space for very good and valid reasons. The irony, though, is once they do adopt, the adoption curve is very, very rapid. So if you look at, and there are large examples of this through the course of history, whether it's online services, use of mobile for authorization, those kinds of services, which in their first day were probably a corporate treasurer's worst dream, you know, in that the idea of empowering your staff to be able to move money around through their mobile phone yes. was not exactly a high priority. Now they are seeing the universality of it, they're seeing the convenience, actually that this is a source of incredible real-time data on which they can run their business. So the adoption curves tend to be very flat, and then they spike up.
We haven't quite got there yet, but you anticipate it around the corner?
We think when the corporates do become comfortable with a channel or a medium or a payment type or a new service, and it's appropriately marketed and sold, and it's in the customer's interest and designed appropriately and so on, that actually the barriers to entry are not there. And I think the theme that we're talking about today, making payments simple, notwithstanding all the other value add that a treasurer or a corporate will look for in terms of, you know, transparency, access, and competitive pricing, simplicity still is absolutely fundamental to what they do.
Now, one development we have seen over the past year or so is the development of the bank payment obligation. Yeah. And you could probably explain it better than I can. But my understanding of it is that it has the sort of security of letters of credit, but the flexibility of open account.
Yes.
I mean, how revolutionary do you think it is?
Well, it is revolutionary. I mean, it is a new form of providing that assurance and confidence around the settlement risk that exists in international trade and commerce. It's still early stages in terms of its, you know, whether it will be adopted. The trade business in particular is quite slow to change. It is documentation intensive. It's process intensive. There are closed loop ecosystems that have invested in large proprietary technology solutions, whether it's EDI and so on and so forth, which you know, will take a significant amount of investment and time to adopt new technologies. But I do think BPO is very innovative. It was born out of something called TSU. It was Trade Services Utility, which is a bank-to-bank matching engine on trade finance, which really was conceived by the banks, but probably did not have very strong commercial application, at least in its first phases. We now have this BPO obligation, which has been tested. It works. And it's really up to the banks in particular to educate their clients, to sit down and say, you can settle using these instruments, and these instruments, what works best for your company. So I think that's quite an exciting space, Brian.
Okay. Mike, I mean, your business is increasingly, you said it was accounting for trade or facilitating trade in the corporate area. Is that correct? Or?
I didn't say that, but it's certainly an area where we would like to explore. Yeah. Business to consumer is our core business, yeah. But there's no reason why PayPal can't be extended to operate in other areas such as business to business, yeah. And to be a partner of financial institutions for providing services to their customers. So this is something that I am directly involved in as the financial innovations role, is exploring ways of partnering with financial institutions to say to them, is the PayPal network and the PayPal capability of interest to you? Can we add value to your customers at the same time as generating value for ourselves? Are there areas where we can cease to look at each other as kind of the wolf at the door and start to think of ourselves as ways to generate incremental new business together? And so that's very much our approach, and to that extent we do have some conversations with transaction banking, with retail banking groups across the world, and we've got something like just short of 300 different financial institutions in various stages of agreements with us on different types of projects.
Okay, so can you put a bit of flesh on that? I mean, what sorts of, can we sort of group those projects into different types? I mean,
yes. So PayPal's been operating send money products inside the PayPal network for a very long time. So send money was a core part of the PayPal account. When you opened up a PayPal account, you could send money to anybody else who's got an email address, and in many countries a mobile phone number, and the recipient would get an email to say you've got money. It's come from your friend, all you need to do is open up a PayPal account to get it. Oh, you've got a PayPal account, it's already in your account, the balance is there. Now that functionality we have developed using a set of APIs that came out towards the end of 2009. We've developed into a portfolio product that we can now extend to financial institutions and the retail banking and the corporate banking. Do you want to offer to your customers in your customer environment the ability to have a global send money product which can send money from your online or your mobile banking or from any of the devices or user experiences you've got, so your customer can send money to any recipient they've got the email address of, and it's powered by PayPal. But it's not a PayPal user experience on the sender side, it's the bank's customer. So we're not getting in the way of, there's no disintermediation threat, and it adds value. It's another service that a bank can use. That's a very tangible product that we have quite a lot of people now signed up for and using. We also talk to banks about some of the concerns they have are how do they get to the top of wallet in the PayPal account. So we have a program where banks can link their financial product to a PayPal account if they're creating the account, put their card or their bank account at top of wallet, so that then that's driving spend that could have gone to another bank if they didn't control that experience to their account. We also have a program where we're helping banks drive deposits. If someone's creating a balance in PayPal, can we allow that customer to withdraw those funds to a bank account really quickly and make it a liquid process? So a small business who's creating balance is very sensitive to their liquidity. They want that money and they want it now. In the UK, with faster payments, there's now a very rapid way of getting funds out of your balance. But in most countries, that doesn't exist yet. You've still got a 1, 2, 3, 5-day clearing cycle if you hit the weekend or the holidays. So we're looking at, could we develop relationships with particular banks who want to try and add value to their customers? You can get your money out quickly. Lots of ideas. I mean, I could probably talk about a couple more. But
well, let's pick up on the liquidity, and let's bring Lawrence in. I mean, clearly, when you talk to banks, and you probably talk to corporates too. I mean, how much now is liquidity, one of the key issues that they're concerned about?
It's obviously a huge issue, and something that that the more we can do to make sure there's visibility of it, that we can settle quickly, that you understand the needs and drivers of the customer from the bank's perspective. Obviously, the more business you're going to do. I think one thing that we've seen is that the corporate to bank relationship now, though, has in the past always had some issues. I think it's one of those strange things where both sides were always unhappy with the relationship. Corporates thought the banks weren't responsive enough, and I think banks always found it expensive to connect into to a lot of corporates. So we came up in conjunction with 7 banks for this financial services network now, of which Royal Bank of Scotland is a part, along with Citi, Standard Chartered, Bank of Tokyo Mitsubishi, Bank of America, Nordea, to create a cloud offering where the corporates and banks only need one connection. Because if you think in the past, they've had to have multiple connections into each bank and each corporate, and that's a costly business. So this is a cloud offering now where we're connecting the banking network with those corporates, and then it's not just payments that go through it, it's value-adding services, I think, and that's what these corporates really want as well. So they want to have the payment facility, their liquidity, etc. But I think the clever organisations are going to put more services in this cloud now. So, maybe there'll be things like compliance for local regulations, maybe some help with factoring, and as we mentioned before, getting back into the value chain of the corporate, not just executing a payment for them. And that's where I see a lot of the future here is the value-added services that banks can now offer to that corporate network, whereas before they were just executing a transaction. And if you can go from the transaction execution business into the value-adding elements of providing services for your customers that they want, that's when you're going to build a relationship that's not just a sticky thing because it's quite difficult to move. It's actually value-adding for the corporate. So from our perspective, I think that's the way that we see this all moving in that space.
Yeah, I mean, Neil, presumably you would reiterate that. I mean, perhaps you can tell us a little bit about value-added, both for corporates but then also for other banks that want to produce that for their own clients.
So I'll share a small story here, which is possibly my largest client, who shall remain nameless. Shared with me the other day that what they value most about what we do for them is the information and the data and the insight and the operational content that we are able to package, share, analyze, slice and dice, and report back to them that helps them run their business. That's all hinged on an execution service, which happens to be payments and trade based, which is great. And obviously we charge them fees for doing that. But the insight is the piece they really value is the information and the content. And indeed the comment was, we could not run our business without this information. So if you do not provide this information in the way that we need it, in the time frame that we need it, with the right data quality and so forth, we have a big challenge, a big issue. And clearly we don't do this for everybody. We do this for a small number of very significant large clients. But the insight is that's what they really value. And so to Lawrence's point then, leveraging the enabling capabilities and connectivity options, whether it's through the cloud or otherwise, that are now available to provide these additional really value-add services is where we need to move.
Okay. Well, how do we make the cloud secure? That must be the first question any corporate's going to ask you.
How do we make the cloud secure?
Or is the cloud secure?
I guess
reassure us.
Yeah, I guess it's like all technology. People don't like to accept it when it first comes in, and then when it becomes the standard, and everyone says, hey, why were we all worrying about this? So, yes, there'll be some organisations, some corporates who will not want to move, I think, payments to the cloud, and that will be there will be a period of time in which they will decide whether or not they want to go there. And I think there are other organisations who are perfectly happy already with a lot of cloud applications. So we see this. We see this all the time. I think there will be a move to it. I think the cost paradigm is just totally different when you look at this cloud perception and the ability to connect in. So we've seen it with all sorts of different networks. I mean, we recently purchased Ariba, who bet their business a few years ago on this type of approach, moving into the cloud to do a lot of transactions with customers in that space. So technology and security is always an issue. It's always a game of cat and mouse as to catch things up. But I think from our perspective, we definitely see that's something that's going to be more and more utilised, and people become more comfortable with it. And it will remain, I think, a secure area. But there will be a lot of focus, I think, on ensuring that the confidence is there from the customer side and the bank side that relationship is intact.
Okay. Mike, you told us you were enthusiastic about the cloud. So,
well, yes. I mean, PayPal's built in the cloud, so
yeah.
And we are also extremely visible and a very obvious target for anyone who wants to attempt any kind of fraud.
Okay, so tell us how you've gone around dealing with that.
Well, I think we have many different levels of controls. Some are very direct in terms of the physical security we can implement, but also automated monitoring of every transaction that happens through the system, plus backup processes and people. It's a whole set of controls. It's not one size fits all, and it's not static. It doesn't stand still. Customers are wanting to do new things, we're wanting to do new things, and obviously people who are trying to attack us are also trying new things. It's not a standstill. So this is a constantly evolving world, and you have to work at it. But I don't think the cloud is something to be feared. I think there's a lot of proven ability to be able to use it for financial services already in place. And we are not in a position where that's even a question. It's like it's actually quite surprising to hear this conversation, to be honest. It's something that we've moved quite a long way beyond.
It's a good point, because until the trust is there, until you've got the clear ability to do authentication, until the broader services are available to some of the corporates, I think at this point, at least my view would be, we're still in the ramp-up phase as opposed to the full commercialization phase.